The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19174. Folks, we're going to take a look at the DAX. As you can see, we completed an ABCD pattern. We've had a little one-day rally here. It's been quite meager as of yet, and we're seeing pretty much the same thing when we look at the FTSE. The FTSE was, of course, actually been going sideways here for well over 4 days now, so it hasn't really bounced very much, and that was a very important 61% retracement down there at that 72.30 level. So this to me is not a bullish sign, because it usually, when it hits those numbers, it comes out of there very, very quickly. That doesn't mean that it's not going to do it this time. It just means that it doesn't happen that way. Now we have another market that is in real in the crosshairs this morning, folks. That's the bond market. Let's take a look at this chart in the Treasury bonds. We're going to bring up the longer term chart here, because I think it's important that we look at this from a long term, and then also the short term. First, we'll start with the weekly chart here in the bonds. You'll notice that we have now taken out the lows of July without too much trouble. And so what we're going to be looking at, what would be most likely to happen next. And the way to do that is to go down to a 4-hour chart. And I'm going to bring that one up next to show you what it looks like when you look at it just over the last 6 weeks. And if you see that, you'll notice that we are completing a very large ABCD pattern here at this 41.09 level. That's, I believe, has been the low so far. So keep an eye on this. This could be a very interesting turn of events where we might get a little bit of a bounce here in the Treasury bonds, i.e. Rates going lower. But this is still a little bit early, but pay attention to it, because it's a big pattern, and it's very, very symmetrical, and it fits in with the long-term scenario. We've been bearish these bonds for a long time, and now we're in an area where they should find some support. Whether they do or not, certainly remains to be seen, but that's the pattern that we're watching. I think that's something that we need to, sort of focus on. There's one other pattern that's very interesting, and that is the pattern that we have in the NASDAQ, and this is very similar to what we're seeing, in all the other indices too, and that is that if you'll notice here, since August, we've had this big run up into the late August, topping around the 30th of August, and now what we've done is we've completed a perfect 61% retracement as of Friday. You'll notice that the market rallied up and made a beautiful Gartley pattern there at the 80 and change level. So whether that is going to be a major top or not, remains to be seen. None of the evidence that I have seen changes my mind that I think this is something that is going to be extremely significant, over a very long period of time. So that's what we're looking at. In fact, I'm not going to put up all the stock indice charts, because it'll bore you to death, and I really don't want to bore you, but keep an eye on it, because, like Twentyman says, defy human nature, do the work yourself. Go in and look at all those indices and see how similar they look to the NASDAQ that we see here this morning. Now, I wanted to go over, I'm going to start a new segment here for those of you that have a hard time with, Fibonacci and stuff like that. And I wanted to just walk through, what we were looking at last week. If you remember, we were watching and I'm going to do this each day for a while. This is a 15-minute chart on Apple. It gives basically the dailies. You can see from September 6th to where we are on the 14th, and we were looking for that ABCD pattern to complete up there around the 228 level. And all I'm going to do now is to just walk through so that you can see how the market is reacting, and you'll see that it's really a really beautiful case of Fibonacci. You'll notice here that after we made that ABCD pattern right up there at just a tad, about 10 cents under the 228 level, we had a nice retracement coming down to 222. We're now trading around 223 this morning. But that retracement that we had between the 13th and the 16th was exactly the retracement that we had between the 11th and the 12th. It went from 225 down to 219. It dropped $6. So what do? We went from 228 down to 222, which is $6. So it's doing exactly the same thing. So what that would lead us to believe is the fact that if this is going to be a symmetrical pattern like this, then what we'd be watching here is you could see that, Apple could really come out of here and get all the way up to 231 if it continues to follow this ABCD structure. Now, the key here is where we are at this 61% retracement at 223, because if it goes below the 222 level, this whole pattern will have changed. In other words, the symmetry that we had between the 11th and the 12th and the 13th and the 15th is no longer in vogue, and so it's going to go down to the next level, which would take it down, most probably down about another $5 or $6 to 217. So we're going to follow this for a few days just to show you how the markets, bounce off of these ABCD numbers and how they hit the 61% retracement. Those of you that are familiar with this will probably find it just a little bit schoolish, but those of you that haven't seen it before, because this is the most heavily owned stock in the world, we might as well look at it to see that you're able to do that. That's pretty much what we're going to try to do here. Anyway, we're going to be looking at some of these things as we go through, and we'll relatively pay close attention to it as we possibly can. Now, I would like to bring out another chart that is very interesting, and that's one that we focused in the newsletter here over the weekend. We were looking for a really good, let's just get this up here so we can see it. It's a really good buying opportunity in silver, and it went right down to the buy price. It's rallied about $600 from that level. Some of you might not have been filled, because if you weren't up in the middle of the night, if you didn't have your order setting there beforehand, you might not have got filled, because it hit the exact price and then turned higher. So if you shaded it by a little bit, you would have been okay, but if you didn't, you might not have got filled. It would have been a coin toss at that point. The gold went right down to the level we were watching, which was right at 1198. We're now trading at around 1304. Let's try that again, 1204. And so that's also made a pretty significant bottom. Now, again, it has to get moving a lot faster in order for it to make it look like it's going to be important over a longer period of time, because it's still very early in the game. A $5 rally in gold is really not much anymore. Another market that is really interesting, folks, and we've talked about it several times, is the Hang Seng. I've been asked to bring this up by some of our folks here in Hong Kong, or over in Hong Kong, and you'll notice that we've just made a 61% retracement from the low in January of 2017. That hit that spot on at that 26,500 level, and it better hold that, because if it fails that, it's got big trouble. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we've been asked to take a look at, hold on one second here. Take a look at this stock. That's the Tesla of China, NIO, N-I-O. It's a new issue. Came out just about 4 days ago. There's not enough information here to really show you pretty much. It's following the cycles pretty well. We had a pretty nice high up there at 114. We came down, at 14, came down to 9, rallied up to 12. That sets up an ABCD pattern at $8. That's down about 20% from where it is right now. But there's not really enough data here to really go on. I don't know too much about it. So all I know is it's the equivalent of Tesla in China, but that is all I really know. So I have to keep an eye out. The main thing, I think you got to watch these bonds here, folks, because they're really at the moment of truth. They've got a hold right in here. The low so far has been 4109. That was the exact ABCD pattern at that point. And it should be able to hold that level if, in fact, it is going to be a good spot, to be long the bonds. Whether that'll happen or not, you have to wait and see. But that's what we're watching here. The stocks are started this morning. We haven't quite opened yet, but we'll be looking at a slightly lower low. Whether these Gartley patterns that we're seeing in all of these markets is going to come to fruition or not, we'll have to wait and see, but they certainly have a lot of a bearish tone just looking at these cycles that we're watching here in the stock indices here this morning that formed, over these last few days. The grain markets are still under a great deal of pressure because of all of the talk that we have going on in the markets. I posted the chart of the hogs. You can see hogs have been extremely strong, and I believe they're going to continue to go higher. We've been very bullish hogs for quite some time. I think I published that chart. Let's just get it up here to make sure. We've been asked a question about the typhoon in Hong Kong. Actually, there was not too much damage. There's a lot of wind blowing and a lot of water damage and stuff at the lower levels, but none of the big buildings were hurt at all, which is pretty hard to do because they're also backed up. Well, some of the places got hit pretty hard. Sarah's showing me on the inside when the windows broke at these high levels. The water comes in and really did some pretty big damage to some of the some of these meetings. And wow, you're right, honey. Those are really, send me one of those and I'll post it tomorrow. Okay. Wow, they did do quite a bit of damage there. So we'll see. Okay. All right. Let's take a look here at the live cattle market. This is one that we owe our hats off to both Rich Anderson and Mr. Z in the room. This has been a very, very bullish pattern, folks. You'll notice that we had the 135 pattern. You'll notice that each of the bottoms has been higher. They've all been right at either a 61% or a 78% retracement level, and now we've exploded to the upside. We're up near a triple top level that we had from December and January, up near this 119 level. We are trading above 118 right now, so this is a situation now. We're up like 13 days in a row, so this would be the time that if you're in that cattle market, just based on technical factors, just looking at it, it would most probably tell us that we want to be able to, be looking at. By the way, if you're interested in what some of that typhoon stuff from Hong Kong, if you go in and Google it, you'll see some really interesting ones. We were watching some videos yesterday about the windows that were blown out in the higher office buildings and all the papers that were flying everywhere. Folks, they had 160-mile-an-hour winds and some even higher. And when that wind opens up and the windows blow out and that water goes in, the paper from those fax machines and all the other stuff has only, and the desks has only one place to go, and that's outside. It didn't happen to many buildings, but those that it happened to, causes a great deal of problems. So that water damage is a real killer. I got hit by lightning here in Tucson back on August the 16th of 1998 when Mark Douglas and his wife Paula moved here from Chicago. I was picking them up at the airport. I dropped them off at their home, and I was waiting to get into the house, but I couldn't because my garage door opener didn't have any electricity, and I was sitting in the driveway, and I heard this tremendous cracking noise, just terrible, and it was a lightning strike. Hit the tree right next to my house, this giant pine tree, and it split in half, and half of it went into the master bathroom and filled up my house with about 4 inches of water and did about $25,000 worth of damage in about 2 hours just to the water coming down. And fortunately, the insurance took care of the whole thing, which was good, and I was happy. But boy, talk about being scary. I had all my computers stacked up on the desk, but don't want to go through that anymore. Happened to be the anniversary of the same day that the king passed away, Elvis Presley. Never forget that, and also Mark coming in. Okay, let's move on here to a couple other things that I wanted to cover with you about some of these things that we're watching is the sugar market. Folks, we've had a big move in sugar. Let's get this up here. Fortunately, we saw that 3 drive to a bottom pattern happening in sugar. We had the rally that took us up here to 12-something in the March sugar. You want to be switched over to March sugar now, I believe, folks, March of 2019. But if you'll look at the time between the 23rd of May and the 29th of May, if you measure that distance, okay, that's a little over 1.5 points. That's exactly what happened between the 20th of August and where we hit on Thursday. In other words, those moves were exactly equal, again showing, that the market not only does it repeat, but it does it with regularity. And that's the whole premise of what technical analysis is all about. So try to keep that in mind as you're watching it. Regarding the stock of NEO, folks, in order to really get an idea of what that stock is going to do, you probably ought to have about 30 days of a 30-minute chart so you can see the patterns unfold. Right now, it looks like we've got a price objective at around $8. I'll be following that one over the next day or two, as I will with Apple, just to show you how some of these numbers pop up and why they work. Sometimes they work, sometimes they don't, but the probability is that they have a positive expectation, and that's what you're really trying to shoot for. So that's another one that looks really interesting. So keep in mind. Let's take a quick look here at the crude oil market. If you notice here, this is a 4-hour chart, and we're in a trading band between 70 on the upside, 68 on the downside. We're trading at around the 68 and change level right now, not doing too much. So If we get either above those levels or below those levels, that would trigger something. But with that big swing we had in there because of the news announcement on Friday, it's waiting to determine which direction it really wants to go. Whether that'll continue or not until that breakout occurs is my guess that it will, but sometimes it'll pop out of there before. So we'll take a look like that. Okay, lightning deaths. Yes, there's a lot of lightning deaths here in Tucson. I think we are the #1 for lightning deaths in the United States. We used to be. I don't know if we're still that way, but we get a lot of lightning here, especially during July, August, and September. Our monsoons are officially over as of yesterday. They usually end on the 15th or 16th of September, and now we're into the beautiful time of the year here where the desert's in bloom and the temperature starts to drop. We don't see too many days of 100 degrees, and the weather is very dry, and it's really the most beautiful time from September all the way through May, and then June, July, August is a tough one. If you can live through June, July, August in the desert, you can live anywhere, but we'll see. Okay, let's move on here. Someone wants to talk about, is that Kansas City? Is that Kansas City wheat? Or is that coffee? Isn't that coffee? Yes, good. I will cover the coffee. That's one that I wanted to cover. We'll cover that when we get back. Thanks, Mr. Z. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at something we don't usually trade, understatement of the year. That is coffee. As you can see, we're trading below 100. And the 100 is the 1.618 expansion number. And if you look really closely on the far right-hand side during that August-September period, you're going to be seeing a 3-drive to a bottom pattern in formation. So pay attention to the coffee here, because this is where it can have some tremendous moves to the upside. Maybe it's going to go to 95 or 90 or 85. I don't know. But on a historical basis, you know, coffee is extremely underpriced compared to some of the other things, you know, that you're seeing in the news. But anyway, that's an interesting pattern. What I would do if I were trading it, and I'm not, is I would wait for the coffee to take out the highs of the last 2 days. That would take it above the 101 level. That way your risk would be below 99, so you're only risking 2 cents in coffee, which is around $700. So that would give us a pretty good chance to say that we're looking at something that could be, you know, really interesting. There's another one, since we're talking about the grain markets, that's very interesting here, and that is in the wheat market. I just want to bring this up to that's very good, Maria. All right, if we take a look here at Christmas wheat, you can see here that we've made a double bottom. It looks like down to near that good support. But what's important here is if you go back to January when it was making its contract lows, that was the exact 78% level at 496 a bushel, and we rallied up to 417 last night, which was a 61% retracement of the high that we made last week, and now we're trading around the 410. So kind of watch December wheat, because it's got a chance in here. Now, all of the grains are still under pressure. Soybeans are still under pressure. Corn's still under pressure. Nothing that we can see right now that would tell us that we want to be a buyer as of yet, but we're getting pretty closely. The only one that looks really interesting from a buying standpoint would be the price of the soybean oil. If we could get soybean oil down a little bit lower, down around the 27.75 level. We're trading around 27.60 and change right now. 27.25, 27.20 is a 1.618 expansion of that move, and it would also be double ABCD over during the July-August period. So that's another one that we're sort of watching. Now, the meal has sort of held up, but it's at you know, it's basically on its last legs. If it doesn't hold this last low that we made just recently, the meal is going to look like it wants to go lower. There's a lot of talk today over the weekend about the Chinese tariffs and all that stuff. So when these things come in, folks, this is the rhetoric that's in the market, and people react to it, and you can get some really violent moves. So be patient, wait for the pattern to unfold, and then, you know, be able to put your order in at that time. That's why, you know, if I were to trade coffee, I would like to see it, you know, at least show signs that it's really ready to start up. That's what I would be hoping to look for. Now, hoping is not a very good trading word, but we want to watch it without too much trouble. But we're looking real closely at some of these things, because they do have some really interesting patterns that are unfolding. Since we're switch the thing here for just a second here on the silver, I wanted to bring this up to you also from our good friends at the Elliott Wave Theorist. We're looking at a record short interest in commitment of traders. In other words, these folks have a record bet that the silver is going to be very, very bearish. And with the pattern that we're seeing in silver, it certainly looks like it wants to go higher, and so far it's doing that. Okay, someone's asking me, David's asking a question, what mental tricks do you use to wait for the right time to act? David, it's really simple. Just turn off the monitor or put something else up so you don't have to look at it. The problem is when you're looking at that monitor, you're looking at a mirror. You're looking at the reflection of all the things in your psychic and all the stuff that's coming up. And don't wait till it hits and then look at it. Like if I were to be watching coffee now, I wouldn't want to be buying coffee until it gets above 101, because if it gets above 101, then I know that 3 drive pattern is going to be fulfilled, and I know that my risk is only going to be 2 cents. I don't have a dog to walk, but I've got a stuffed teddy bear. I put him on the desk here, and sometimes he helps me trade. But Amos Hofstetter, the great trader from Commodity Corporation, had a little plastic plaque built on his Reuters machine that when I was in his office, the 2 times that I was in there, it says, be patient. Wait for confirmation, and what was it? Wait for confirmation, and don't watch the market. Back in those days, we couldn't watch the market like you can now. We only had prices. We didn't have charts being posted. That didn't start happening until 1983, folks. So that was not a problem that they had then. All we had those were Reuters machines and Bunko Ramo machines, where they had the Bunko Ramo boards flashing and stuff like that. They had one of those at Commodity Corporation, but it was all numbers. If you wanted a chart, you had to hand chart it yourself with your ticker tape, and many times I've certainly done that. But that's what I would be watching. So I would put a limit on the coffee, maybe put the limit at 100.50. That's about a full point from where it is right now. And if it gets above that, then you say, okay, then I'll start to get interested in it, because then at least the market's moving up on a short-term basis. You can put your stop below the recent low, so you can certainly quantify that. So that's the main thing of watching this. So keep in mind, if you're in the cattle, folks, we are highly recommending to get out of the cattle. The hogs, I still think the December hogs still have more to go, but they'll probably be followed by the cattle. But they've been acting, extremely bullish, and we wouldn't think that not much is going to happen to change that. But just look at the picture here in December hogs. You can see that it still has some more to go to the upside. We've had that beautiful 3 drive to a bottom down there that Rich Anderson pointed out that was right near the cost of production. That's when this disease came from China, and that evidently the disease is still going on, but it started a run on the meats later. But it wasn't happening with the beef, and believe me, beef is not the big thing over in China. So these markets are going because they have interest in the things that they're watching. So keep in mind that that's what looks interesting in some of these. So it's very important to pay attention to this. Now, we've got a lot of things happening in the foreign currency markets. We believe that this euro had some real strong support. Let's put this up here at the 116 level. You'll be able to see that was a beautiful 61% retracement last night. We're now 90 pips higher at 116.90. That tells us that market is still in an uptrend, looking relatively good compared to some of the others. And it's also positive for the gold and the silver, because the correlation on those is extremely high, and we need to pay attention to that as we're watching some of these things unfold. So we want to talk a little bit, because we got this Brexit thing coming up with this vote or whatever it's going to be. They're going to have another referendum or what. But if we take a look here at this British pound, we're in the midst of a little bit of a correction now. They're probably arguing about what's going on next, but has a chance here for a pretty good rally. Let's keep an eye on that one. 877-927-6648. Jesus.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we've had a request to take a look at the Hang Seng Index. Just got through with that big typhoon over there. I believe it was a number 10 or a number 11. That's about as high as it gets, and that's why if you go on Twitter or go into the YouTube or something, you're going to see some real interesting damage that's happened. Anyway, you'll notice that we had two big gap ups in the Hang Seng Index right off of that 3 drive to a bottom pattern. We completed two major ABCD patterns. One was exactly at a 1.618 bottom. We're down about 1.5% last night because of the damage from the typhoon, from what they're saying. But it's still right near that 27,000 level. We pay close attention to this one, folks, because this has a long-term possibilities of being something, relatively powerful. Because if it can hold these levels, you're still looking at a market that on a longer term basis actually doesn't look very bad at all. If you just take a look at it, you'll notice that it's making a perfect 61% retracement from the January 2017 low. And if it can hold that level at 26,500, then it's got a chance for a little bit of a rally. We're seeing the same thing in the pattern in the emerging markets. If we look at the emerging market ETF, which is the EEM, you'll notice that here again, you're looking at another 61% retracement off of that low in 2017. It was spot on. You can see closely, I've marked it as a 3 drive pattern over the last 6 or 7 months. and it certainly is lined up absolutely perfectly. And if you look to the left there, you'll notice that that high level of consolidation that we had at the 78% level, where the market stayed there for well over a month and then finally broke out to the upside. Boy, that was really an interesting one, because when you absorb that much selling and the market can't go down, it only has one place to go, and that was higher, and that's exactly what happened. So we're at a real key level here in the emerging markets, and also, well, Asia. Basically, you're looking at Asia. So whether that'll mean anything, maybe it'll mean the trade talks will really mean nothing, that the trade talks will work out and that everything worked out okay. Who knows? No one else knows either. But anyway, that's what the charts are saying. So pay attention to that, because if the trade talks turned out to be okay, I would imagine that would be positive to the U.S. stock market, and that would put the market into new high ground and destroy or highly damage the bearish pattern that I see unfolding in some of these things. But whether that continues or not, we certainly want to wait and see if that's going to be the case. Now, since we're talking about the currencies, I think we need to talk just a little bit here about the U.S. dollar, because the U.S. dollar is getting very, very close to this 93.29 level. With the euro being strong this morning, we're pushing down towards that level. It's going to be very important, folks, because you'll notice that's going to be the second major ABCD pattern that we've had in the U.S. dollar index. The first one was back in late March. You'll notice that one with the green triangles. That was the first ABC move in a new bull market. That's what Gartley had talked about. And we didn't get another ABCD pattern until we're forming one right now. So let's kind of watch this here, in that this would mean that the euro would get back near that 118 level again. So it's going to be really, really interesting if that's going to be the case. Now, someone's asked a question about the Russell. If we bring up the Russell 2000, here again, you're going to see a little bit different pattern, but it's also a topping pattern. We had the butterfly pattern up here. Then we had the break, and the rally that we had back on Friday was a perfect 61% retracement of that move, and that tells us that it's probably getting ready to move over. Now remember, the NASDAQ and the Russell were the two that made the market go up, or led the market on the way up. So sort of pay attention to these, because when the leaders start to back off, that's telling us that we're looking at. Someone's asked me to take a look at the soybean oil. I posted that once before, but let me bring it up again. I'll be happy to do that for you. It only takes me a second, I believe, and you'll be able to see where we are, because we're not quite at the level where I want to be a buyer, but we're right at this level here. We're trading at a new low today at 27.60 and change, but the number that I'm looking at here, Ruby, is right around 27.20. That's the 1.618 expansion, and the reason why I'm looking at that is if you go back to June and measure the ABCD structure between June and some of the others, you're going to be seeing that they all come in right around 27.25, 27.30. And that's where I would be watching it. Now, my good friend Simon Only at Sylvius Financial happens to be quite bullish on the soybean oil, mainly because of the problems that they're having over in India. And they're a huge consumer of oil, cooking oil, and we'll be watching that one. But I'm waiting for the 27.25, 27.30 level, because at that point, you only have to risk about $300, about 60 points in the oil to see if you're going to be right or not, because it's in a downtrend and nothing's really happening yet. So I still think you have to wait until we get to that level. Whether that'll happen or not, remains to be seen, but that's something that we're paying attention to. So we'll watch it real closely as we go through here, and we'll see what's happening. Anyway, we're going to take a little bit of time here to take a look at Bitcoin, because there's a lot of news about the cryptocurrencies, and frankly, it's more about blockchain than it is in anything else. And let's just take a quick look here on Bitcoin, and then we will bring this chart up, and hopefully we'll get to talk about it a little bit. Here we go. And there we go. You notice that Bitcoin has basically gone flat here. Oops, I haven't got the thing in there yet. Hold on. I hope that helped, Ruby. Anyway, you'll notice that we've had lower tops ever since May, and this really sets up a incredible possible ABCD pattern going back to December that would take us down to right around 4,000 to 3,800 in Bitcoin, and that's when you want to start looking at some of these things, and then you'll be able to see, what's going on. That's the key of what we're watching here, early this morning. But it's still a little bit early, but we'll see what happens. I think that I've been waiting for this number in Bitcoin for a long time, and folks, I have never put a trade on in these cryptocurrencies. I'm not even sure I'm going to put one on when we get down there, but most probably I will. I'll be looking at one of the really cheap ones, under $1, and put 50 cents on it just to see, what's happening, because there's a big discrepancy between people on what they think this is. Some people think it is a that it is a bubble, and other people think this is the internet squared. So I'm going with the latter. I think it's a chance to seeing internet squared, because this does not look like a bubble pattern in the Bitcoin. And we went from 19,000 down to 5,000 to 6,000, but that's not like tulips. I don't believe that, David. I think it's something different this time. And I talked to some people that are a whole lot smarter than me that have convinced me that, yeah, it is a little bit different. So we'll see, but hey, I was wrong about microwave ovens. I was wrong about color TVs. I was wrong about, what else? Color TVs, the radio, and, electric irons. I was right about indoor toilets. I knew that was going to be a good thing. So anyway, and we'll see anyway. That's what we're looking at on some of these things. Let's take a quick break here, and we'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. sequence. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted a few pictures from the Hong Kong typhoon forwarded by Sarah, and these were from buildings this is the 50th floor, and you can see once those windows blew out with that wind coming in at over 150 miles an hour, it just absolutely whacks it pretty hard. Now, the buildings that didn't have window breakage, they're pretty much protected, but if the windows weren't, then you can see the damage that is out there. So pay attention. Now, tomorrow we're going to have Tim Bost will be on. And he's a really good financial astrologer from down in Florida. And then later in the week, probably Thursday, we're going to have our good friend Stan Harley of the Harley Stock Market Letter on, and we'll be chatting with him. Remember, we are in the time frame of the most bearish time of the year. That's from the 16th of September till the 16th of October. Historically, that is very bearish, but history has a tendency to only work part of the times. So let the patterns, help you along here, and you'll be able to see whether they're going to be working or not. So that's the main thing to sort of, keep your eye on these things. Now, the Treasury bonds have started to move a little bit higher off of that 140, 109. They're due for a rally. They're very oversold. There's a big ABCD out there that we posted here this morning just to give you a heads up on it. Whether that's going to mean anything or not certainly doesn't mean a whole lot unless it works. And the main thing is you have to take the responsibility to put your stop in and say, okay, I'll play, but I've got to be able to, keep an eye on some of these things. Now, the news that I'm going to have Sim only on this week, possibly for 5 minutes. He's very, very busy, but he wanted to, share some information about these tariffs that are going on and the demand that's going on in some of these markets because, we got wheat, corn, and beans down at levels that we haven't seen in a long time, and they're giving it away. So we'll see. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!